Hello and welcome. A huge thank you to the team at My Tax Accountant for putting this whole guide together. Today, we are going to talk about something that could genuinely put thousands of pounds right back into your bank account: stamp duty refunds. We're going to break down the one thing that unlocks it all: the SDLT 16 form.
So, let me ask you this straight up. When you bought your new place, did you get stung with the higher rate of stamp duty just because the sale of your old house was taking forever? If you're nodding along right now, you are definitely going to want to stick around. Because this number right here, 13,500 pounds, wow, that is the average amount UK homebuyers overpay in exactly that situation. It's a massive amount of money, and you're often paying it during one of the most stressful times of your life. And you know what? It could be yours to claim back.
So, here's our game plan for today. We're going to talk about this hidden tax windfall, then check if you're eligible. We'll look at the latest tax rates for 2025/26, and then I'll walk you through the refund guide, step by step. We'll also cover the common mistakes you really need to avoid before wrapping up with how to get your refund right first time.
All right, first up, the hidden tax windfall. Let's really get our heads around what this refund is and, why it even exists in the first place. So, at its heart, the idea is actually pretty simple. The SDLT 16 form is your official way of asking for that stamp duty surcharge back. See, the government wants to discourage people from snapping up loads of second homes, so they charge a higher rate of tax. But they also get that sometimes property chains just don't line up perfectly, and you accidentally own two homes for a short while. So when you buy your new home before you sell your old one, you get hit with this extra tax. This form is how you tell HMRC, hey, I've sold my old place now, I've met the conditions, it's time to refund me the difference. Think of it as your financial safety net. Okay, section 2. Are you eligible to claim? This is the big one, right? Let's figure out if this actually applies to you and your situation. Right, there are 4 key boxes you need to tick. 1, you bought your new main home in either England or Northern Ireland. 2, you paid that higher rate surcharge specifically because your old place hadn't sold yet. 3, you have now finally sold that previous home. And 4, and listen, this is the one that catches so many people out. The property you sold was your actual, genuine main residence. We're talking about the place you lived day to day, the address on your driving license, your bank statements, where you were on the electoral roll. It can't have been a buy-to-let you were renting out or a holiday home. Now let's talk about timing, because this is absolutely critical. HMRC has 2 deadlines that are completely non-negotiable. First, you get 3 years from the day you bought your new home to sell your old one. Simple enough. But as soon as that old property sells, a brand new clock starts ticking, and you only have 12 months from that sale date to get your SDLT 16 form submitted. Seriously, put a reminder in your phone, circle it on the calendar, whatever you need to do. If you miss that 12-month window, that money is gone for good. Okay, section 3, navigating the 2025/26 tax rates. So if you're eligible and you've hit the deadlines, how much money could we actually be talking about here? Let's look at the numbers. You can see the difference pretty clearly here, can't you? The column on the left is the standard rate, and the one on the right is that much higher rate you probably paid. For the 2025/26 tax year, that surcharge adds a pretty chunky 5% on top of each band. Your refund is simply the difference between what you paid under that right-hand column and what you should have paid under the standard one. It's a straight calculation of your overpayment. Let's make this totally real. Imagine you bought a new home in London for, say, £400,000. While you still owned your old flat, you would have been hit with a stamp duty bill of £27,500. Ouch. But after selling your old place and getting that SDLT 16 form in, the tax gets recalculated at the normal rate, which is just £10,000. That is a potential refund of £17,500 landing back in your bank account. I mean, that's a new car, a whole kitchen renovation. That's a life-changing amount of money. Right, section 4, your step-by-step guide. So how do you actually do it? How do you fill out the form? Let's walk through it. It's honestly more straightforward than you might think. First up, get all your paperwork together. You're going to need your unique transaction reference number, or UTRN, from when you first paid the stamp duty. This is absolutely vital. You should be able to find it on your SDLT 5 certificate. You'll also want the completion statements from your solicitor for both the sale and the purchase. Then just head to the HMRC website. I always recommend filing online with your government gateway account. It's way faster, it's more secure, and it'll flag any obvious mistakes as you go. From there, you just start entering your personal details and the core info about the transaction. Just triple check every single digit. And just remember why you're doing all this paperwork. Take Emma from Bristol. She successfully got back £10,500. That money went straight back into her home and paid for a whole new kitchen she thought she'd have to save up for years to get. This isn't just about tax forms, is it? It's about the real-life impact this money can have.
Now for the final few steps, you'll need to put in the details of the property you sold, the address, how much you sold it for, and crucially, the exact completion date. Then you verify how much you're getting back. The online form usually works this out for you, but it's always smart to have your own numbers to hand just to check it. Finally, pop in your bank account number and sort code for where you want the refund sent, sign the legal declaration saying everything is true and correct, and hit that submit button. Okay, Section 5, Common Mistakes to Avoid. Knowing the steps is great, but here is where people often get it wrong. And stay with me, this next point might surprise you. It's the one that catches almost everyone out.
Right, here's the pro tip, and it is the single biggest pitfall. That term main residence isn't just a label you can stick on any house you happen to own. It has to be, factually, the home you were living in. And don't think you can just wing it. HMRC can and will check this. They've got systems that can look at where you were registered to vote, where your bank statements were going, your council tax records, utility bills, the lot. Getting this wrong doesn't just delay your claim, it can get it thrown out completely and could even trigger a wider tax investigation. You don't want that hassle.
And that's not all. Here's where most people go wrong. We've talked about the deadline, but simple things like a typo in your UTRN can cause an instant rejection. Another trap, if you rented out your old property for a bit before you sold it, you absolutely must have declared that rental income on your tax return. HMRC systems talk to each other. And finally, don't just assume that a slow property market counts as an exceptional circumstance to extend that 3-year sale window. The bar for that is incredibly high. We're talking things like government restrictions or natural disasters. Oh, and here's a quick did you know for you, but it's a vital one. The SDLT 16 form is only for properties in England and Northern Ireland. Scotland has its own thing called Land and Buildings Transaction Tax, or LBTT, and Wales has the Land Transaction Tax, LTT. Both have their own completely separate rules and refund forms, so please make sure you're using the right system for the right country. And finally, Section 6, Get Your Refund Right. Let's pull everything together and talk about your immediate next steps. Now, look, while the process can be straightforward, what if your situation is, well, a bit more complicated? Maybe the property was part of a business, or you inherited it. Maybe you own a few properties, or you're dealing with a divorce settlement. In any of those scenarios, getting professional advice isn't just a good idea. It can be absolutely essential to make sure you maximize your claim and avoid making a costly mistake that could lead to penalties down the line. And on that note, if you want to make absolutely certain your claim is handled perfectly, or if you've got any other tax questions at all, the team at My Tax Accountant are ready to help. You can reach them directly on WhatsApp or give them a call on 07854 255 375, or you can drop them an email at info@mytaxaccountant.co.uk. And for more handy guides just like this one, make sure you subscribe to their YouTube channel. The key takeaway today is this. Don't leave your hard-earned cash on the table. Check your dates, check your eligibility, and go claim what's rightfully yours. Thanks for joining us.